Hello, everyone. My name is Nathan Kolb, and I want to welcome you to today's Creditsafe webinar. Today, we are talking about compliance and risk management, and it is the third of a four-part series with our partner, Serrala. So we're going to tell you a little bit about each company, and then I'll tell you about our speakers, and we'll let them have at it. So Serrala is a global B2B fintech software company. They optimize the universe of payments for organizations seeking efficient cash visibility and secure financial processes. As an SAP partner, Serrala supports over 2,500 companies worldwide with advanced technology, intelligent automation, and personalized consulting. Their comprehensive end-to-end portfolio automates inbound and outbound payment processes, as well as the management of related data and documents. As the world's most used provider of business intelligence, Creditsafe owns and maintains one of the most comprehensive and rapidly expanding databases with credit information on over 365 million companies worldwide. They're changing the way business information is used by offering a collection of products and solutions that help companies leverage their domestic and international credit reports, company data, principal information, domestic and international judgments, and credit scores to make smarter business decisions. And again, this is a joint webinar series, and today we're focusing on compliance and risk management, especially the data and integration side of that, as an overall setup on the Know Your Customer or KYC process. So we have two awesome speakers today. For those of you that have been in part of the series so far, you will recognize our first speaker. Michael Kohler is the principal solution architect for Serrala. With over 10 years experience working in the order to cash field, Michael's present and previous roles have given him unique insight into best practices in managing credit and compliance risks, as well as collections operations for businesses of various sizes and industries. And Chris Hutchings is joining us as well. He is the expert on all things compliance for Creditsafe and has been in the industry for 7 years. During that time, he's ranged from identity verification to PEP and sanction screening and working with all of that. He's carefully studied all of the new and existing AML sanctions screenings legislation to make sure that our customers stay ahead of the competition when it comes to any of these type of compliance issues, as well as KYC. So we've got a couple of guys that really know their stuff and are great at what they're doing. So gentlemen, welcome. It is always great to have you.
Nice to be here.
Thank you.
And Chris, or Hutch, as he's called around our world, because we have a bunch of Chris's, you look a little different than maybe people have seen. So I just do want to verify that it is you. It is a more cleaned up, less rugged looking you, but it is you.
Yeah, it is.
Okay.
Well, look younger.
Yeah, a little more boyish there. It's kind of nice. I like it. So, and folks, what we're going to do just to get an idea of who's in the room as we're getting into this and as the speakers are getting ready to pop up their presentation and everything, I am going to launch the first poll. So there will be a poll up here just asking kind of what area best describes your role within your company or what you're doing right now, just so we have an idea of who's in the room. If you wouldn't mind answering that for us, it'll be up for about 3 minutes. And gents, go ahead, take it away.
Okay. Hello, everyone. Good morning, good evening, good afternoon, wherever you're based. So the first thing I'm going to talk about is what do we mean by compliance? And I mean that as we by Creditsafe. So I've been lucky enough to look after all our different offices around the world for Creditsafe. And one thing that all of our customers have in common, every single different office and business around the world, if you go into that office and ask them what they think compliance means, is you'll get a completely different answer. So compliance is essentially adhering to a rule or a regulation. And obviously, depending on where you're based, what industry you're in, who you're trading with, who your trading partners are, those rules and regulations can differ. So I wanted to include this slide to begin with to let you know what we mean as Creditsafe by compliance, what areas of the compliance market we're servicing. So the first one and the big one, I suppose, is sanction screening. Now, sanction screening is so broad and touches every aspect of business because it applies to everyone. There's not a set of rules that say you have to do this or you'll get this punishment. Sanctions screening is very much a punishment industry. You'll have heard of the big sanctions lists, OFAC, HMRC. They're basically a big long list of people you can't do business with. They can be individuals, businesses, organizations, and they're usually linked to things like money laundering, trafficking, drug trafficking, human trafficking, or terrorism offenses. So that's sanction screening. Now, sanction screening applies to everyone that's trading internationally, regardless of whether they're in a regulated industry or not. The next one you may have heard of is AML or KYC. So anti-money laundering or know your customer legislation is a bit different as it applies to a set regulated set of industries. Now, what you're essentially doing with anti-money laundering checks is you're verifying the person you're doing business with is the person you think you're doing business with. You're also verifying where the funds have come from, and you're making sure that they haven't been convicted of any crimes that may relate to money laundering further down the line. So you're building a picture of who you're doing business with through that process. Now, sanction screening is part of the anti-money laundering process, but it isn't the be-all and end-all of that. CTF, or counter-terrorism funding, is a particularly important one. So obviously this is stopping money getting to terrorist organizations. The main difference between money laundering and terrorist financing is that terrorist financing, the money doesn't have to necessarily come from crime. So with anti-money laundering, they're criminal offenses and they're trying to hide that money from the criminal offenses. With counter-terrorist financing, people could be earning their money legitimately in legitimate jobs all around the US, but it's where they decide to send that money. And you need to make sure if they're using money transfer schemes or they're using your products to buy and sell on, they're not doing it to fund terrorism in any way. I think we may want to move on to the second slide there. Okay. So to give you an idea of what we're looking for when we're doing these different styles of checks, whether it be anti-money laundering or sanctions, we're looking for a set number of crimes, and these crimes are predicate crimes to anti-money laundering usually, which sanctioned entities are part of. So these could be terrorist groups, drug cartels, organized crime, money launderers, fraudsters, and economic sanctions. Now, just because there's not legislation in place that says you need to be doing these checks, it doesn't necessarily mean you shouldn't be doing these checks. Now, regulatory fines and regulatory risks are there from the outset. So you know, if you're in a regulated industry, if I do this or I don't do this, I'm going to get this set fine. Now, there's a very different type of risk in reputational risk. Now, you may be in an unregulated industry, but if I'm a partner of yours, if I'm a customer of yours, and I find out that people have been using your services to transfer money to terrorist organizations, whether and adding in our traditional financial offering of the credit reports, and we're building it all together into one product that you can integrate with, that you can use as a self-key solution that you can use to protect your business from reputational, regulatory, and financial risk. It's important to mention at this point as well, as Creditsafe and Serrala, there's a very important relationship, and it's a three-way relationship. It's between you, your regulator, and your supplier. So it's not only important that you understand what regulation that you need to adhere to. The regulator needs to make that regulation clear to you. And if they haven't made that regulation clear, then it's up to us as Creditsafe to help you on that journey. So we need to be knowledgeable about your industry, what you're doing, who you're trading with, and what you need to adhere to, what these different legislative bodies are globally if you're trading into another country, but also just domestically in the US. You need to know what sort of checks you need to be doing if you're in a specific industry, and Creditsafe and Serrala should be there to help you through that. Just to give you an idea, we document and we have these available for you. If you're trading into the UK or you're trading into Canada, or you're trading into Japan, for instance, or even in the US, we provide guides and become sort of a knowledge partner for you as Creditsafe, not just a data supplier. I think I may be ready for the next slide at that point. And this feeds into what we're trying to do as an overall product strategy, both Creditsafe and Serrala. First of all, we're trying to be proactive, not reactive. So it's not up to you to tell us we've got this regulation to adhere to, and we go away and build something, and by the time we've brought it to market, it's 6-12 months out of date. It's our job as your provider, as your partner, to work alongside you and look down the line, look 6, 12, 18 months down the line and see what legislation is coming and begin to adjust our products and build our products. So we can come to you and say, look, this is coming 6 months time. This is what we've built. This is what we've built to help you. So we need to be proactive, not reactive. We shouldn't have to wait for our customers to tell us what they need. We should be able to aid you in that journey. We want to make sure that everything we build is simple, but also significant. So there's a lot of different compliance variations, as I mentioned in my first slide. What we don't want to do is try and be everything to everyone and ending up being nothing to no one. What we're trying to do is pick a few key areas that we work well in, the vast majority of our customers are playing in, that affect everyone, that we can really help with and make those features brilliant and provide you with the data that you need. And that feeds into doing the basics well as well. So we're not trying to be everything to everyone. We're not trying to do anything really spectacular or groundbreaking. We're just trying to give you what you need, a simple and significant solution that includes reputational risk data, regulatory risk data, and credit risk data. And I think at that point, I'll hand off to you, Michael.
Sure, and I'm gonna just jump in here while you guys are doing this to give you the results of that first poll, okay, where we were talking about just what role everybody has in here. So about 63%, a little over half of our group here is with credit and risk. No surprise there. We have about 13% in sales and marketing, 21% actually in IT and systems. So we've got a good showing from that group. And then we have some other here that are quite defined by our options here. But we've got that going on as well here. So just to give you an idea of who's in the room and kind of who you're talking to. And I'm just going to take this time too to kind of pop into the next poll as well. So Michael, as you're getting ready to kind of take over and start talking here, I'm going to launch our next poll. Okay. So folks, you'll have a couple of minutes to look at this as well.
Could I just add a point on that?
Please.
For the results of that, Nathan. So one thing I didn't mention then is that Creditsafe understands that the whole concept of compliance is a relatively new industry for businesses. It's only about being around in any sort of format for around 20 or so years. And every business, there's a slightly different department doing it. Whereas you've got the credit department, there's always been a credit controller in a business. It's a long-standing tradition in business. Compliance isn't always the same. It can sit in a lot of different departments. And at Creditsafe and with Serrala, we understand that, so we can build bespoke solutions to whatever your workflow is. So you don't have to adhere to us and what we're building. We're not saying, here's our product, fit around us. We're saying, what's your process? We'll fit around you. Sorry for that. I just wanted to add that in.
No, great points there. Absolutely. So Michael, we'll let you kind of jump in here and see how you can follow all this.
Yep. Yeah. Awesome. And that was kind of your last point, Hutch, was a perfect segue into what I wanted to share here. Because obviously at Serrala, being one of the technology partners of Creditsafe, we are always concerned with integration. Like, that's our business, right? We look at business processes and see how we can integrate them into your ERP system and automate as much as possible, not just to make processes more like streamlined and less costly, but also to help with monitoring risk. Before I go into like very specific ways how we at Serrala do this, I just wanted to mention a couple of things here. That Creditsafe, for example, not only provides those risk data and compliance screening, but Creditsafe also provides on the technological side APIs, which are basically interfaces that help you to integrate those data into your CRM system, your ERP system, or wherever you need them. And at Serrala, obviously, we also have a couple of products and software solutions that help automate and optimize processes along the whole financial value chain. And this is really where like the collaboration between Creditsafe and Serrala happens, where we at Serrala take that data provided by Creditsafe and integrate them into the business processes of screening your customer suppliers during onboarding and at various other times that I'm going to mention in a couple of seconds. And that seamless integration with your ERP system is actually really important. I mean, it's one thing also to understand compliance is very important. And I think also the attendance at this webinar and the interest shown in this webinar shows that people are paying more and more attention to the whole compliance topic. But on the other hand, it's also important, like for companies to think about feasibility. So companies usually, they have come around or come to terms with the fact that we need to do some compliance screening, sanction screening, AML, and everything that we hear from the market when we are called upon to respond to requests for proposals for software solutions, or we talk to customers of ours or prospects, we are always getting basically grilled around certain aspects of the compliance topic that you mentioned, Hutch. So the companies, I think, have been really making progress in understanding that this is important, and not just because of regulation, but also because of the whole financial and reputational damage that can result from not taking compliance risks into account. But the other side of the coin here is like feasibility, like how are we going to do this? Like usually when process owners are faced with changes in process or new things they need to do, they first of all think, like, how many new people do I need to add to my team to get this done, right? So, or like what resources are available so I don't have to add new people. So this is really the space that I wanted to talk about now a couple of minutes here, and I'm just going to share that slide deck again.
While you're doing that, Michael,
so
I'll let you know
Sure.
where we're at here on these, because I think it'll help you as we're looking through this with what you're talking about.
Absolutely, yeah.
So that question of, does your company currently have a process for, screening for sanctions or compliance? About 35% of our audience said yes. 25% said no, which leaves 40% that said they have no idea. So there's a lot of folks that are unsure one way or the other exactly how or if that's being done within their company. And then, like I said, about a little over a third are doing it, and about a quarter of them are not.
That actually kind of confirms also a point that Hutch earlier made, that compliance doesn't always fit with the same team or department in every organization. So and I. Since we have also some IT people on the call, I would assume, somebody in IT might not be too aware of certain business processes, whether they exist or not. And that's okay, because it's really, compliance shouldn't be, the compliance we're talking about here shouldn't be like any concern to the IT organization. Obviously, IT organizations have their own set of compliance rules, they
Yes.
are on the lookout for and concerned with. And also we at Serrala, when I still did projects, I've seen like compliance sitting in so many different areas. It was like somewhere within the financial organization. Sometimes some companies actually have a compliance officer. So they have embodied that function in a specific position in the company. But for most companies, I would say I've always seen it like spread onto different teams, and a lot of it into the credit team, obviously, because by the nature of their work, they with the risk assessment and due diligence process that they have to do anyways, in terms of like what financial risk certain business partners bring to the companies, it would naturally also fall into their area. And interestingly enough, also, and especially in recent years, we have seen the credit team taking on that kind of screening and due diligence process, not just for onboarding new customers, but also for suppliers. Because it's kind of like in the nature of their work, it's kind of applying the same set of rules or very similar rules to, both sides of the house, the customer and supplier side. So which brings me actually to this point here, like where in that end-to-end, customer lifecycle process or supplier lifecycle process is compliance embedded? So obviously most would say during the onboarding. No brainer, of course. You want to do business with a new customer or take on a new supplier. and especially if you're in a certain industry, you really have to know who you're doing business with. Especially if you're in the manufacturing industry, you might really want to be careful who you're even selling to. Sometimes we've seen it on the supplier side, but also on the customer side as well, that it's really important to know, make sure that you're not selling into organizations that, as Hutch previously mentioned, would take your products and use them for unlawful acts or even, terrorist activities. Here, obviously, there's a lot of manual work that this could entail potentially, because if on the one hand you do your financial risk screening, you process financials for your customer or supplier, you pull a credit report to see how stable they are financially, but then you also have to check them against certain sanction lists. So that's kind of another element in the whole process. And the issue here is obviously integrating that in your process and also documenting that, having that audit trail. So I think especially for the compliance risk screening yes, you want to document each and every decision, hopefully in your due diligence process, but especially that compliance process, because if you get audited, from a regulatory body, you need to furnish proof that you did your due diligence and screened your customer or supplier against all the lists you were supposed to screen them against. Serrala can help with that, to integrate that specific piece into your onboarding process, and also into any kind of workflow you might have, which might be especially important if certain steps in the process, in the overall onboarding process, are split between teams or different team members. But with the onboarding, hopefully compliance screening will not stop, and you will have some sort of continuous monitoring. So whereby, just as you would do with your credit risk, where you get proactive alerts from your compliance provider as to, things have changed. So hopefully you will subscribe to a similar service also on the compliance side, and getting proactive alert when and if anything changes. Because in the end, a company that is totally fine today, it might not be the same situation in the future.
Hey, Michael, I do want to jump in real quick with a question here. So a question here is, how long do they have to keep due diligence records, and how do those type of things need to be kept?
That's a very good question. So it all depends, first of all, on the regulation, if you have to keep it for specific regulations. With the regulation will usually also come a retention period for audit trails. And then companies also will have an internal policy around other type of documentation for audit trails and a retention period for that. Maybe Hutch, if you know any specific examples, you can also, jump in.
Yeah, no problem. So we're seeing more in all aspects of regulation. So with this sort of compliance regulation, everyone takes their guidance from the Financial Action Task Force, and then it's up to the individual member states of the adhere to the Financial Action Task Force guidelines to decide how they implement those within the country. At the moment, they're working off around 5 years. You need to keep that. You need to keep the records of the audit trail and any onboarding activity you're doing. But this is likely to change because we're seeing regulation change far more frequently than it ever did. Just to give you an idea from a global perspective, there was the EU Money Laundering Directive. The first one was in 1991, and there wasn't a second one until the mid-2000s. We've had two within the last year in Europe, and that's mirrored everywhere globally, especially in the US, because it's where the bulk of the regulation comes from. So sorry, this is a long-winded point, but the point I'm trying to make is, I think because of how the regulation is, they'll keep upping the limit that you need to hold it for. So it's 5 years at the moment. The next set of regulation could be 7, could be 10 years. I think eventually it will be indefinitely, which is why it's important to have an electronic solution rather than an old-fashioned manual process, because it makes it far easier to keep records for a longer period of time. I hope that helps.
Yes, perfect. Thank you for shedding light on that as well. And as you said, like having electronic records makes it easier. So on the one hand, but on the other hand, you also probably would want to think about some kind of solution that helps you to keep those records easily accessible as well, and also authorization restricted and grant access to only people that should have access to it. Okay, so there was another poll on the screen here. I hope people got the chance to vote for that, because I didn't get a chance to comment that actually, but that was about the compliance factored into the outgoing payments process. So I don't know, Nathan, do you have any results on that yet before I jump into that point?
You know, I always have them for you, and anything for you, my friend. So the big winner here on this one, I don't know if it's a winner or not, is 57% of the folks that responded are unsure. They do not know if that's something that their company does. 14% said no, and then you have about 30% that said yes, we do that as a company. So, you know, a third, let's say, are doing it, and the other third are the other 2/3 are either unsure or not doing it.
That is amazing, because that also confirms a trend that we have been seeing in the market for the last couple of years, that you know, companies have recognized the need that, you know, it's not just, you know, compliance screening. It's not just like a one-off thing you do in your due diligence process when you onboard customers or suppliers. It's also something you want to have on an ongoing basis. And here, I mean, we specifically focus on the outgoing payments process on with that question. But with the next point I wanted to mention here, you know, when you subject individual business transactions to some sort of compliance screening, obviously also inbound payments can or should be a part of that, specifically when it comes to anti-money laundering. You know, so hopefully companies that haven't done that yet are considering building some kind of mechanism, or are evaluating hopefully solutions that will provide them with the mechanism and the algorithms they need to subject also individual business transactions to an ongoing compliance screening process. And on the outgoing payments process side, obviously it's a bit more sensitive because it's like money leaving your organization, you know, so and apart from, you know, that compliance screening against like blacklists, whitelists, sanction lists, and all that, making sure you do not like funnel money into the hands of people that shouldn't be receiving any money as per the government's regulations. Another aspect that is very similar to it, and that can also be very easily through a solution added into the whole screening process, is the fraud monitor component, you know, whereby you can set up a set of rules that will check for unusually large amounts or amounts, you know, that fall out of a certain tolerance for certain suppliers, unexpected beneficiaries, unusual times of executions, access from unusual IP addresses, and all that can be factored into a whole set of compliance and fraud scoring. And anything that falls outside of certain tolerances or that raises red flags will not go through an automatic process. Because, I mean, here we're obviously talking about companies, big corporations that have a lot of payments going out every day, just because of the nature of their business. And when even like authorized payments that need authorization, you know, very rarely do approvers have the time to check every single transaction on them. And there are spot checks, obviously, hopefully that every company conducts, but that kind of, you know, fraud and compliance monitoring system will help them to see any potential red flags and raise awareness to that, and prevent something from happening that shouldn't be happening. Okay, with that, I think we can hand it over to the audience for any kind of questions they may have.
We do have a few questions that have kind of come in, and I've held more towards the end. And folks, the questions are open, so feel free to add any to these and all of that. So I'm just going to kind of read them as they came in. I'm not going to really try and mess them up or anything. But first one is, how much liability or responsibility do I have if my company only deals domestically? I mean, on this webinar right now, we've got, just in the speakers, just in the folks on the screen for you, we have 3 countries and 3 continents represented right now as far as where we're all located, which is kind of crazy to think. So, I mean, we have this global, mindset, but a lot of companies do just deal domestically. They only do things within inside of their own country. How does this apply?
They'll each country has its own domestic protocols. So the vast majority, if we look at the UK and the US, a lot of the regulated industries don't trade outside. So if you're talking accountants, if you're talking legal firms, a lot of them won't do cross-border trade, but they still need to be doing a certain amount of checks. So it would depend on the regulation in the industry you're in, but there are definitely regulatory fines available for people that are just trading domestically. So you need to be aware of who you're trading with, because of course money laundering specifically isn't an international phenomenon. I mean, any local criminals from your local drug dealer right up to your Pablo Escobars, they've all got to launder their money somewhere, and a lot of that is within the country. So they're still at risk regardless of if they trade. Obviously there's a higher risk if they're trading cross-border, but it's not always the case.
Yeah, and also in terms of terrorist financing, I read the other day that in the case of Canada, for example, they added 8 new organizations to their domestic terrorism list. So that list is, and I guess it's the same for the US and like anywhere else in the world. So that list is continuously being reviewed and expanded by government authorities around the world. So even if you don't trade outside of your country and domestically, there's still a chance that you might be, either receiving goods from organizations where you should be receiving them from, or shipping stuff to organizations and making yourself indirectly liable for their illegal terrorist activities.
Yeah, great points. Great points. So next one, I think this is going back to that one of those first screens that Hutch, you had shown. But it basically says, aren't anti-money laundering, anti-terrorism funding, sanctions, all this stuff, isn't it basically all just the same thing? I mean, aren't we just really are we splitting hairs, I guess, here?
Yeah, so there's a lot of crossover between those different aspects, and a lot of people's onboarding or ongoing monitoring processes within their company will include one or multiple of those. They are separately. So if we look at anti-money laundering as really the regulated sector, so we're looking for solely money that's being laundered or people that are laundering money there. And then if we look at sanctions, that could be anything from drug trafficking to enforcement to crimes. And then if we look at terrorist financing, it's the sending of money overseas or domestically to someone you shouldn't be. So I suppose in a way, yeah, we are splitting hairs. They are separate aspects, and a lot of the time, our customers will be combining all 3 in some sort of process. But I think it's just good to be aware of what those different aspects of the compliance process are.
Gotcha. And Michael, is from your perspective, any differences there or major things that we need to discuss, or does Serrala handle them any differently?
Yes and no. I mean, obviously, I have no words to add to what our expert on the matter said. But in terms of like how it's handled in a potential solution is, it depends on like what kind of list you want to screen your business partner against. And as in like with the Serrala solution that you embed into your either customer supplier risk monitoring, you have the option to decide like what kind of screening you want to do. So it's, having knowledge around that is very important, because obviously we are technology partners and like we can be supporters, but in the end, it's the actual person that carries out those due diligence checks that needs to know what exactly they're doing in the end. So it's also very important that, although it might appear to be like, oh, splitting hairs, but it is important to know the difference in the end, to know exactly what you're doing there.
Yeah,
Great points.
Yeah, exactly.
Great points. Yeah. And we've got one more question that I have here. And if anybody else has anything else, please feel free. We still have a little bit of time as we answer this one. But the question is, how many levels of separation does my responsibility go? So I'm guessing like how many levels in, am I going here?
So it's a bit of an open-ended question, just because it depends on a lot of different factors. So one, the money that's changing hands, the amount of money, and for what services, where the money's coming from, and whether you've performed adequate due diligence to discover where that money's coming from. So what I mean by that is it gets very difficult to track where money's coming from when it dips into one of those tax havens that everyone wants to get the information on, but no one has the information on. So the answer to that is it's on a case-by-case basis. It's completely dependent on what that specific scenario is.
Okay. It's, I think all of us were hoping for a really, two, that was easy. Like you go 2 levels down and you're like, yeah, no, sorry, can't give you anything easy here.
It's quite, all regulation is quite purposefully broad. So it'll say you need to make adequate effort to discover where the money's coming from, but it puts that onus on you to decide what adequate effort is. So it's all about defining your risk appetite. So you need to agree that with your regulator, but they'll purposely be ambiguous and not really tell you how many levels that you should be checking.
Okay. So yeah, folks, if you haven't been adequately shown that you need some help with this, there's the question, because we don't know. Hopefully you're all taking this to heart and making sure that you're going to do well with this as you go forward with your companies and making sure that you're compliant here. But that is all the questions we have. So gentlemen, I'm going to say thank you to both of you and appreciate your expertise and your time here. And before I say goodbye, I'm just going to remind everybody, don't forget, this is part 3 of 4. So next Thursday, same time, 2 p.m. Eastern, we will have another webinar in regards to specifically having other professionals, credit and finance professionals, talking about how they're doing this type of integration, how they're doing this SAP style integration, and how they're doing that with the data and how that's working for them. And I will be joined as a co-host next time by the wonderful and always present Michael Kohler. So he will be our co-host next time, and then we'll have a bunch of credit and finance professionals that will be joining us for that. So we hope to see you there. Hutch, Michael, thank you guys so much. Enjoyed it greatly. And folks, thanks for joining us, and we'll see you next time. Thanks.